Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. Hey man, I hope you guys enjoyed your week and you had a good week. It's almost Friday, so basically this week is almost over for trading. You know what I mean? So I'm about to give you guys a cool little saucy midweek. No, not midweek. A little saucy trade breakdowns on all the trades that I took this week so far. And I hope you guys enjoyed this video. Smash the like button. And hopefully I can convince you to smash it later if you haven't yet just now. All right, so let's get right into this video. So the first trade I took this week, let's go over so I can show you guys that I actually took this trade. This is my Telegram journal, so if you guys would like to join that, you guys definitely can. All right, I wasn't as active as I usually am this week on my Telegram journal. So here we go. Okay, so right here, this was the trade that I took on USDCAD. Here's the entry right here. You can see all that. So let's get right into the framework and how I took this trade. Okay, and what made me want to take it. So looking at the daily, right, last week, I think that was the 6th. Well, actually not last week. I think this was 2. I don't know what day this was, but all I know was we took out sell side liquidity here and we had a displacement higher. Does that mean I'm bullish? Not necessarily, right? I'm still drawn down to these lows and this low down here. Even though we took out sell side liquidity, we could get buys in here, and continue up and push into this fair value gap. All right. So this was the high hanging fruit right here. All right. But I also noticed this fair value gap right here. So let's actually draw that out. All right. Let's draw this out real quick. Okay, so I would want to see if price is gonna get up into this PD array. I would want to see price get up and close above this fair value gap, or just wake up into here. You know what I mean? If it's bullish, right? So this was first on the menu, not this. This was first on the menu. Also, the reason why I like this area is because you have this 1, 2, 3, 4 consecutive up candles. What does that make this whole entire range right here? This makes it a bearish order block, right? This whole range, because if you go to a higher time frame, this whole thing would just be an order block, this swing of price, which I talked about in my, I didn't teach this, ICT did, but I give my perspective on it through my recent videos. So if you guys want to watch how to become elite with order flow, there you go. Right, so I look at every swing of price that gets broken as a shift in delivery, which makes it an order block. Every swing of price, right? So this swing right here, especially this one, because it's 1, 2, 3, 4 consecutive up candles, which ICT teaches, this makes it an order block. This whole range right here. Okay, yes, you can refine it to here, but I like this with the fair value gap. This makes it high probability. All right. So first on the menu was here. We came up into that and we worked inside of it. So as you can see, we have an up candle that was created, and then you can see this down candle on the daily came and broke below this up candle right here, even broke below these 2 consecutive up candles right here. So I already know before I scaled down, this was a shift in delivery right here. Okay, so let's go to the 4 hour. Okay, so the 4 hour, right, we came up, here's that same fair value gap right here, completely rebalanced it. Okay, completely rebalanced it, and then we had a lower move right here, which created a shift in delivery right here. Okay, even right here with this right here, these 2 up candles right here, this down candle, once this is broken, that's a shift in delivery right there. But this right here, this whole down move right here, is that shift on the daily. Okay, but right here, here's a shift on this relative time frame right here. Okay, with this horizontal line. So we broke that, we came back inside of here, right? And I was looking to sell inside of the open, right when it came into the open of this candle right here. I think this was, oh, this was this week. Yeah, this was this week. Okay, no, it was last week. I was looking to sell right here. Okay, but we didn't get that, right? So what did we do? We came up, rejected. I wasn't looking to sell right here, but once it came up into here, and this was on Monday, we came into the open of this order block right here, and then we had a displacement lower. All right, we had a displacement lower, we had another shift in delivery, price came up right here, Notice how even though we came above this right here, this order block, we didn't close below it. But one thing that I did want to see that really validated this setup for me is that we ran out buy side liquidity. So this old high, Monday's high, got ran out here on Tuesday, right? Once we took this out right here and we had this displacement lower right here, this was my setup. All right, so we took out buy side liquidity. This happened around New York session. What happened here? We have 1, 2, 3, 4, 5 consecutive up candles. Once we break below here, that's my shift in delivery with this down, this fractal low. This is like a fractal low to me. All right, we broke that down here. Here's a displacement. Right, there's the displacement right here, and my entry was right at this fair value gap here. All right, right here. Okay, stops above, and my targets were to these lows down here. 1 to 3, yeah, like right there. 1 to 3. I don't know exactly how I had my stop, but this was the framework of the trade, okay? And my stops was like right here, or a little bit above. Maybe it was a little bit higher. You could just go back and look at it. So once we came into that fair value gap, we worked the fair value gap. We overshot it right here. Okay, stops are above this high, so it's completely safe, right? We broke down. I held it through Asian, right? Held it through Asian. Right here, I took my stops off, so spreads wouldn't come and knock me out. And then I held this. I went to sleep, held this through Asian, and let it do what it did right here. All right, I woke up to it at a 1 to 3. All right, so that was my trade on Tuesday. All right, that was my trade on Tuesday. Easy 1 to 3. This was all the framework of the trade, and it's this easy, just like that. All right, let's go to GU. So we're gonna start off with the trades that I took today, and I'm gonna go through a little lesson with you guys on the trade that I took on S&P. All right. Okay. All right. So all right. So we have this high. Hold on, let me clear this out real quick. I'm gonna make it a little bit cleaner. Okay, so we have this high right here. We came up into a PD array right here in this wick, had a displacement lower. My draw, I wasn't too sure on my draw. I just know that we're in a like a bearish order flow, even though it's like kind of like weird and messy, right? So once we came into this here, we're still bearish, right? I'm still willing to attack this low right here. All right, I'm still willing to attack this low because my draw is a lot lower on price. All right, I don't call tops, I don't call bottoms. You know what I mean? So after we failed to take out this low, we ran out sell side liquidity. You could get short-term buys here, right? But I'm still focused on this range from high to low, right? And you know, in my rules, usually when price doesn't take out a low and it doesn't close below it, I'm expecting price to draw to this high. But in this case, from what it did today, I was willing to sell it based off of, you know, the context that I had. All right, so this is my range from this high to low. You have internal liquidity built up right here, okay, above this high. So you have internal liquidity here. All right, if I'm still bearish, right, I'm expecting GU to fall. I was expecting US 100 to fall, you know, AU to fall. So this was enough context for me. All right, so once we came up above this high, let's go to the hourly. All right, you can see we built up more highs right here during London. Notice how I'm waiting for this high to be taken out before I start looking to take a trade, right? So I'm looking for this to get taken out. Here's what happened. We came up, took out the high, nice reject, nice displacement right after we took it out. Okay, you go to the 15-minute, 30-minute, you have an order block that's created. Okay, so you have these two consecutive up candles right here. This is the order block that I'm paying attention to. You have a lot of fair value gaps inside of here, right? This is your highest one. This is your low hanging fruit one. All right, now me, I wanted to wait for confirmation on this trade, right? Yes, I could have took it at this fair value gap right here and sold it, right? But I wanted some confirmation inside of this two consecutive up candles right here. All right, so what I waited for was waited for price to come into this range right here. You also have your fair value gap. First on the menu was here, right? Once price came into here, all right, I looked at a lower time frame, and you can see how price took out this little high right here. We worked inside this fair value gap, and we started. Let's go to the 1 minute. We started. I was. See, the thing is, right? This wasn't as clean, okay, that I would like it to be. So that's why I risked half a percent on this trade right here. All right. So once these two highs got red and we're inside of this fair value gap, I'm looking for price to attack this low. Now notice how it was playing around a bit. It left a fair value gap right here, but I wanted to see it attack this low. All right. So once it did this right here, where you had these move up, these 4 consecutive up candles right here, and it broke down like this, I went ahead and entered half risk right here. Okay, half risk right here, and then I put my stops above this high to be safe. Now if you want to get aggressive, you could put your stops above here, and that's cool, but I put my stops above here just in case I wanted to get a little freaky, come into this fair value gap up here and then dump down, right? But put my stops above there, entry here. All right, targets was this low here, right? That low right there. And this was the move right here. Okay, so notice how even though if I didn't take it here, you had a shift right here. You had a shift. Actually, you had a shift right here in delivery. Once you got this move right here and it came down, okay, you had a shift right here. But this is what I like to look for this low to be taken out, and this whole range becomes your order block. Okay, this whole 1, 2, 3, 4 up candle range. So anything inside of that range on the right side, you're looking to find confluence inside of that. So even though we came and worked this fair value gap, this up candle, you can enter it off of here on that same fair value gap. All right, after it breaks here. All right, but this setup wasn't as super high probable as it formed, right? This wasn't as high probable, so that's why I risked half a percent on this. And you can see how we had this meltdown. So let's go over a little bit of trade management, right? So my stops were above here. Okay, once it came back here and dropped below right here, and we took out this low, we have this swing of price right here. I didn't expect price to go above this high. All right, so once we have this breakdown, right, I don't like none of this delivery. Okay, it's slow to me, especially if I'm looking for it to get down here. So once we had this push right here, leaving this fair value gap, breaking this low, I wanted to see price. If you go to my Telegram, I think I said it in my chat, I didn't want to see price go above this fair value gap, and I wanted to see price have a displacement from this fair value gap now. Okay, and that's exactly what we had, right? We reaccumulated here, and we had a displacement. Where did we reaccumulate at? What's that? Well, where did we redistribute at? Where we reaccumulated at? Okay, all this is just a market maker sell model and a consolidation. So let's go in and mark that up. Okay, and the consolidation right here. Okay, I'm not gonna do it too pretty. All right, new green. Okay, reaccumulation, smart money reversal, Smart money reversal right here. All right, low risk sell, low risk sell, reaccumulation. I mean redistribution. Sorry, redistribution. Right there, and redistribution right here. And then we attack sell side liquidity. We could have had another one somewhere around here, but we didn't. And we attack here because we did. The reason I think we didn't have one right here is because after we redistributed right here, we had another one like right away. You know what I mean? And we just attacked. All right. So that's all that was right there. It's just a market maker sell model here, right? So they reaccumulated, redistributed here. Now, if I wasn't paying so much to S&P as I was in this trade, I probably would have took a re-entry right here, and probably put back my full risk and then put stops right above this high, because I wouldn't expect it to go above this high. Then move my stops to break even. That way I'm still losing like half of a loss at the end of the day with a 1% risk, right? But we hit TP. I pulled out a lot earlier because this is all I needed. All I needed was like 2%. That's it. I don't know exactly where I pulled out at, but I know I pulled out at like 2%, which was like 1% because I risked half, right? So that was an easy 1% trade right there. And that's what happened with GU. All right. Now for the real deal right here, US wanted. All right. Let's go over this. All right. So looking at US 100 NAS, I'm kind of bearish, okay, looking at NAS, because I'm looking for us to come, even though we tapped into this fair value gap right here, I was looking for us to come back into this order block down here and fill in the rest of this fair value gap. All right, I'm not completely bullish to look for it to go higher, all right, because this is just a shift right here. I didn't get another move to show me that we're bullish to start going to these highs, right? So looking at that right there, we came out filling this volume imbalance, barely took out this high right here, right? Now because it didn't take out this high, does that mean it didn't take out this high, so we need to come back up here and take this out, so I'm not gonna sell? No, like I'm not bearish. No, you know what I mean? Sometimes price is gonna leave liquidity for later. Doesn't have to come right back to it, right? So you see the delivery right here, right? No order flow. All right, it's very bearish. We have these highs right here. Okay, we have these highs. So let's go over that. These highs here. All right. Now notice something. I took this trade even though there was buy side liquidity. Now remember how I said it doesn't always have to take out liquidity. It'll leave it for later, right? All right. So with the context that I had, right, what I did was here, because these highs were here and this could have possibly been ran out, I waited for more confirmation. I didn't go in full risk yet. All right, so this is what I did. New York made this high yesterday. Okay, this was Tuesday. We took out this high just a little bit, right? We came back, filled in this fair value gap. Here's the shift in delivery right here. All right, shift in delivery right here. Now, because that high was there, I needed to wait a little bit. Okay, so coming into the open, the stock open, right? I'm paying attention to this order block right here. All right, we're building up to that. Look at how slow price is moving into that, right? All right, we have a little build up here before the open, even in New York, right? Now, what ICT said was usually the open, anything before the open is like your opening price, and the open is usually creates like the Judas swing, right? So if I'm expecting, it's either gonna run this high or it's gonna hold this order block, because we took out this high right here and we had a nice displacement lower, showing me that smart money is most likely in this move. They were in this move right here, right? They bought to sell. So now they're most likely going to come and break even and then drop, right? So we had this little reaccumulation. All right, here's the open CME. And then look at this big candle, right? So when I'm looking at this, right, I wasn't ready to trade it yet. But when I saw this right here, okay, and it was just pushing up, okay, it's either going to take out this high or hold this. I was more so looking for it to hold this. So once you get this big candle, a lot of people are scared to sell this, right? A lot of buyers start jumping in because of FOMO. Oh, it's a breakout, right? We took out this high, we're going higher, right? It's a breakout. CME open, everybody starts jumping in. Okay, so me, in my mind, I'm like, people are scared, would be scared to sell this, right? I know people are buying this and seeing me open, and you know, we're getting this big candle, right? So I'm seeing this as a Judas swing, right? I placed my horizontal line right here just to keep my eye on where price was at currently, and just putting my horizontal line here to focus on where it's at on this side, right? So I'm gonna leave it right there. But the main framework is off of this up candle right here. Now I put a half risk trade right around here. Okay, stops above, targets below, right? 1 to 6, targets below. All right, this was my first entry. Okay, let's move this over, right? So I took one entry here. All right, now let's say you're scared, right, to take this trade. You don't have to just take this trade, right? You don't have to put a sell limit. Okay, look at this up candle right here. Once that up candle gets broken below, look at this. What's this? I could tell that this is just a accumulation, manipulation, distribution, right? Expansion right here. Once this up candle gets broken, I'm looking for this up candle to hold, right? I'm looking for this up candle to hold, and I'm looking for it to attack this low here. Okay, so if you're expecting this up candle to hold, you can easily be a seller right at the open of this up candle. Put your stops above, and that's your entry there. You don't have to get in up here. All right, so let's mark out the open of this up candle. All right, so that's the open. We're looking to frame and trade off of this up candle because we came into this up candle. We're in the open, stock open. We got this big up candle, Judas swing. Now we have this breakdown. All right, so let's go down to the 5-minute right here. Now, what's inside of this up candle that we could potentially get a trade off of? Okay, so first you have this fair value gap. You also have this low fair value gap right here that you could wait for a price to get into, right? And that's it right there. What I did was, this is my low hanging fruit. I see this as an up candle, right? This is my entry right here. I don't have to wait for it to come up into here. It can come up to here and dig into that. You feel me? But I'd rather take this entry right here because this is the low hanging fruit. You're gonna miss a lot of trades just waiting for this, trying to be too accurate. You know what I mean? So I'm looking for this right here. Stops above. This is my entry. And now my target is the same targets. All right, same target. There we go. A little bit lower. All right, same target. First entry up here, second entry here. Now we got our second entry. Okay, but what is this? What is this, y'all? All this is right here. It's just another market maker sell model, right? You have a end of consolidation, right? Reaccumulation, smart money reversal. I don't know where the low risk sell is. I think this would be the low risk sell. Well, they reaccumulate right here, so they would distribute here. So I don't know where the low risk sell happened at, but I just know, like, in my own mind, how I see it, this is a market maker sell model, right? So if they reaccumulated here before they push price up, there you go. They redistribute here. Redistribution. drop lower. Now I have one entry here and I have one entry here, but guess what? NAS gave me another one. All right, now remember how when I went over how to become elite with order flow, how on your way to your draw on liquidity, up candles, well, it depends on the draw, right? So let's say my draw liquidity is bearish. Anytime my draw on liquidity is bearish, I'm looking for up candles to reject price, right? To hold price, not go above it, not go above the up candles or close above it, right? It could go above it, but not close above it. I'm looking for those up candles to hold price and reject price. Just like if buy side liquidity is your, let's say buy side liquidity is your draw on liquidity, you will look for down candles to support price. So once I saw these two up candles get made, after it came into this fair value gap, ICT, he teaches on, I forgot, one of his YouTube mentorship videos. This will become an intermediate high right here because it filled in this fair value gap. So I'm expecting price to not really go above this high. Now there is a fair value gap right here that price could come into and then drop, right? But right now my mind is planning on this being an intermediate high right here. Okay. So once we have these two up candles made right here, it's game over. I get another entry. All right, how do I do that? Let's look. All right, 15 minute up candle, 15-minute up candle. What am I looking for? I'm looking to frame a trade inside of this up candle right here. All right, so let me take that out. So this up candle right here, I'm looking for a frame a trade. What's inside of that up candle? Yes, you have this highest up close candle, this extreme premium. You can wait for price to come up into here and then try to take your entry and then have like the minimum 2 pip stop loss. Yeah, you could do that. But me, low hanging fruit, all it needs to do is come up into this fair value gap right here. Because if this is my up candle, this is the fair value gap. It's not a fair value gap up here. It's a small fair value gap up here. I can wait for that. But this is the fair value gap I want to get in. Fair value gap, 5 minute. This was my second entry. Let's go to the 1 minute because I kind of refined it just a little bit. I got a better entry. So entry was like somewhere right there. Stops right above here, outside of the Dylan range, high to low. Okay, you don't need 2 pip stop losses to be profitable. All right. Targets 1 and 2. There we go. That's my second entry. First entry here. Second entry here. Third entry here. Here's the low. Sell side liquidity. Destiny arrives. Hope you guys enjoyed this video. If you guys did, go ahead and smash that like button. Go ahead and share this video if you haven't. I mean, you're gonna share the video, right? No, I'm just. But share the video, guys. Share the video for me. Hope you guys did enjoy it though. And comment. Give me some feedback. If you got questions, you can always comment or hit me up on Telegram. And I'll see you guys in the next video. Peace.